Hi, welcome to this video, Dave. It's all about a simple Forex trading strategy. It's perfect for beginners. The reason it's perfect for beginners is it's very easy to learn. You can learn it quickly. The logic it's based on is sound, and you can have confidence in it. And it actually makes really, really good profits if it's done correctly. And that's what this video is about. I'll give you some insight into swing trading and how you can do it for profit. Swing trading itself is normally defined as taking moves that last for a couple of days to around a week, and basically take advantage of when prices become overbought. Swing trader will be looking to sell them. When they become oversold, you'll be looking to buy them. And the logic of swing trading is very easy to understand. If you look at the long-term trend, the long-term trend will obviously have moves to overbought or oversold within it, and this is when the swing trader wants to take advantage of a trading signal. Now, the prices in Forex, despite what a lot of people say, move to the long-term fundamentals. They rule over the long term, but in the short term, it's sentiment, it's greed and fear. And greed and fear will push prices too far to the upside or downside. Greed and fear then basically peaks and prices come back to more realistic levels. And, if you become a swing trader, what you need to do is basically identify these setups. So how to do that? Simplest way is to use a volatility indicator. Okay, so a Bollinger Band, and use some momentum indicators. And on the Bollinger Band, what you want to do is look for volatility, so that the outer bands have expanded and prices have gone right up to the outer bands, and then look at the momentum to see how overbought or oversold the contract is. So you can use several momentum indicators for this. The most common ones are probably the MACD, the RSI, the stochastic, and the ADX. What you want to do is when you see price overbought, you've seen a price spike on the chart, look at it on the Bollinger Bands, then look at momentum. Just see, let's say it's an up move. If momentum is overbought, even better if it's an extreme, and then you would look to sell. You need to have a target, with your swing trading. And the best way to work it out is to look for the mean price. The mean price is basically a moving average, and the mean price can be any average you want, but probably the best average is a 20-day moving average. Just look how often prices, when they move away from the 20-day average, move back to it. So that can be your target or a support and resistance level near it. When you're basically overbought or oversold, just wait for a divergence. So you want momentum to turn down, okay, in an up move, or turn up when you've had a move strongly to the downside. Once that occurs, that basically will trigger your trading signal. You need to put a stop in, put it back behind a level of resistance. Let's say it's an uptrend. Let's say you've got a level of resistance and it's at a high. Don't put your stop too close. Give it a bit of room so that you're not going to get caught with all the other traders who place their stops a few pips behind a level. So try and make your stop 30 or 40 pips back from them at least in a swing trade. When you're looking for your target, basically look to take your profit early. So if you've got a support level, look to take your profit just above that level. Don't be greedy and hang on, because the closer it gets to support, the more chance there is that it could bounce, okay? So just take your profit in. So I call it kind of hit and run trading. You just want to get in and get out before the herd, and bank your profit and then look for the next swing trade. With swing trading, the more overbought or oversold, I can't stress it enough, that the market is, the better the odds are of success. So don't just trade any move to resistance or support. Just be very selective and make sure you're catching some extremes. When you're swing trading, should you swing trade only in the direction of the trend, or can you do it both ways? My own view is it doesn't matter. You can swing trade against the prevailing trend or with it. It really doesn't make any odds at all. Just so long as you have that setup where you've got a very, very overbought or oversold scenario, and you look for divergence from momentum being overbought, you'll do just fine. Now, swing trading is not as popular as day trading. I've always viewed day trading as a total loser strategy. And a lot of people want to day trade because they don't have the discipline to hold trends long term. But day trading itself within a day, just trading random volatility. If you want a short-term method that works, swing trading is ideal. You don't need as much discipline as trend following because you're going to get your profits or your losses relatively quickly. If you learn swing trading, it should only take you a week or so. Then what you do is pick out the momentum indicators you like. Don't use too many. Don't use all the ones I've said. Just use a couple. And you can use candles as confirmation as well for reversals. That's personal preference. But the logic of swing trading is very soundly based. Investors will always spike prices too far to the upside or downside due to emotion. It just never changes, and that is your opportunity for profit. So consider a swing trading method, and I think you have a very simple method, but it's very effective at making money, and it's very quick and easy to learn. So if you're getting started in Forex trading, I would recommend that you look at Forex swing trading and get yourself a strategy based upon the logic I've discussed, and it can lead you to long-term trading success. Thank you very much for watching me. Take care. Have a good day.